in March, Goldman, I think, released a note where they said that in the US and Europe, in the EU alone, there might be 300 million kind of white collar workers that are exposed to automation in some sense.
Welcome to Roll Right In Money with Max and Tim from Oceanic Partners, a VC firm in San Francisco. I'm your host, Fabian, Untitled an accelerator for software startups. Roll Right In Money had a 2-month break. Now we're back and ready to dive into the world of finance and economics again. We apologize for our absence, which was due to compliance requirements from Oceanic's broker partner.
Getting back to it. I miss doing these.
Yeah, it was so sad.
Yeah,
no financial updates.
Always have good chats.
It gave you a chance to go on a long surf trip, though.
Yeah, true.
That's very important as well.
So everyone knows about ChatGPT and generative AI and LLMs. At this point, we're sure. But clearly the hype that we have seen around this space is meanwhile real. And entrepreneurs and others in the innovation ecosystem need to be aware of what has been going on. And so that's what we're talking about today. So in a nutshell, Tim and Max, what is going on?
Yeah, I mean, in a nutshell, I would say we got to late 22 and ChatGPT was basically unleashed on the world. But to a lesser extent, image generation stuff like Midjourney. But I think they really showed the world at large what AI can do. And I think, frankly, it felt miraculous to a lot of people. It really felt futuristic. And it really felt like a quantum leap in what kind of at a very basic level we can expect from kind of interacting with technology generally. Obviously the concept of AI is new. It's been a fixture in popular culture for decades. Generative AI is just one subcomponent of a broader AI industry that's been active for many years now. But it has certainly made kind of the capabilities and the potential of the tech more real in kind of the public eye. And
also, as part of that nutshell, I would add, and I completely agree with what Max said, but some of the players or the players that are leading AI right now are some of the largest technology companies on the planet. It's not the small players that are getting in and making big waves. It's the Googles and the Microsofts and Amazon, et cetera. And it's really mind-bending to try to understand how far this can go, with respect to all of the data that is out there. We see ChatGPT and we think about it writing code or writing stories or doing searches to use as a learning facility. But really, there's so much more information out there. The dark web, all of the cameras around the world, all the stuff that NSA listens to, and how can that information be used to manipulate individuals that do spend a lot of time online, and so it's kind of coming around, and people are thinking about all of the potential huge benefits, but also how scary it could potentially be.
Yeah, I mean, it's big and important. But kind of Fabian, what you said, I think was pretty important. The hype is there and the hype is real. It is hype. I mean, to a great degree. And, just kind of borrowing, a concept from Gartner that I think a lot of your listeners may be familiar with. I think this whole episode with ChatGPT, it kind of rapidly pulled generative AI into basically near the peak of its hype cycle. And it's a really, really buzzy peak. I mean, in this very short span of time, it's really kind of captured the imagination of consumers and entrepreneurs, and it's created pretty meaningful major ripples across, the markets, public and private. So I mean, it certainly has created that splash. I mean, I think for me, the episode that really stands out, and this was a few months before ChatGPT came online. If you guys remember the former Google engineer who came out and he claimed that Google, their model, I think it was Lambda, that it was exhibiting signs of
Emotions.
reasoning or sentience, right? And spoiler alert, it didn't. It's not sentient. It can't possibly be. But if that was kind of a clever marketing ploy, it really kind of portended the things to come. So very hypey, but hypey for a good reason. Saying that we're kind of at the near the peak of this hype cycle, it really doesn't diminish the potential of this technology. But if we go by history, we would kind of expect things to calm down from here. And from then on, we would kind of begin the long process of learning to use these technologies in kind of useful and commercially defensible ways. And then however many years from now, we'll wake up and AI will just be diffused into so many products and services that we deal with, and it's just going to be mundane reality for us.
Obviously, so many companies have been working on these AI things and solutions in many different ways. Yeah, so you mentioned NVIDIA. It's not about only AI specific chips, but it's also computer vision for cars, it's data labeling. And I mean, big data is a topic for many years now, industrial applications and so on. But it really is generative AI that creates this hype, right?
Sure.
And what is this exactly? Can we go a little bit more in depth? What is, and what is the spectrum of this generative AI?
Yeah, I mean, I would say generative AI is it's a subsegment of the overall space, but it's obviously an important one. I define generative AI as just that. It's generative in a sense that it generates novel content, and that can be text or image or code or models of molecules for drug design. So I mean, really kind of spans the gamut there. And that content can be used in a variety of different ways. So both by kind of the end users and by intermediary products and services. So, as far as how it manifests in the real world, I mean, there are basically AI models and there are apps that sit on top of these models. And I'll leave it to your listeners to dig into exactly how the generative AI models work, but there are a variety of them. They have a variety of different applications. You've got diffusion models and GANs and CGANs and VAEs, and of course the transformer model, right, which is like GPT, right? And since ChatGPT is kind of in focus, I'll very simplistically say that it's just a very large neural network trained on a vast amount of a vast data set sourced from the public domain internet, from other places, and it essentially really accurately correlates what words should follow what other words in specific contexts, and it can kind of, by that virtue, it sort of understands natural language inputs and can create natural sounding outputs, among a variety of other things that it can do. But generative AI as a concept, it's been around for a little while as well. It really kind of lived out its early life in research lab companies like DeepMind, which was acquired by Google later, and OpenAI. Obviously, everyone knows OpenAI. They all kind of came on the scene in early to mid 2010s, and they've been making progress the whole time. I mean, OpenAI released the first GPT model in 2018. I think Google's BERT came out around the same time as well. By the time that we got to 2020, GPT-3 was already there, right? So they've really been kind of cranking along as far as progress. Beyond that point, the floodgates are sort of opened, and we saw very rapid development of other models like DALL-E and Lambda and Open Diffusion, just a variety of others.
But why now? So, or where are we in this overall development cycle in this industry?
Yeah, still early innings. I mean, I would say the industry is arguably still pretty nascent, but it has made pretty massive strides at the same time. Going back, everything that you saw, again, in early to mid 2010s was basically comparatively small scale models. They were research projects essentially. From about 2015 to 2020, these models really started to grow in size and become more complex. More computing infrastructure became available for cheaper. They just started throwing more compute power at it. Something like 60x more computing power was thrown at kind of training these models between 2015 and 2020. So, obviously the capabilities there expanded pretty drastically. But they were still essentially research projects back in those days as well. I mean, these models were very difficult to run and pretty difficult to kind of interact with if you were a developer. But they were starting to demonstrate real results in kind of text and speech and image, both recognition and generation. And then from that point, everything just kind of scaled. More specialized infrastructure kind of became more widespread. We have more GPUs being thrown at it. Software and hardware became more optimized. Again, training just continued to get progressively cheaper. More innovation, more researchers. Models started to really open up to third-party users and researchers. And then, of course, we get to 22. ChatGPT kind of lands on the scene, and it just kind of becomes a massive user growth story from there. Fastest user growth story to date, I believe. 100 million users in a couple of months. And it really put the wind in the sails.
Boy, I mean, it was days, huh? It was days.
Well, I think it was millions in days, and then 100 million in just by January. And I think that record was beat by Facebook's Threads.
Maybe.
Yeah, maybe. They've lost a lot of engagement apparently, but that was the big story. I mean, clearly those are not trivial numbers, and kind of really shows the product sort of resonated with the public, again, captured the public imagination. But going back to a point that Tim mentioned earlier, I think it's really important to note the partnership dynamics in the space as well. So as these models got bigger, they began to require a lot more extensive infrastructure and compute resources. I mean, I think these models are extremely expensive to operate and run. And so the very large cloud providers got involved because they had the infrastructure. They could basically deploy it across, a vast kind of distributed infrastructure that they had. And they had the experience of basically running something at that scale, and orchestrating just a bunch of GPUs running at once, which you need for models like this. Obviously the famous one is OpenAI, and it's kind of tight affiliation with Microsoft. Microsoft first invested in OpenAI in 2019, followed up by the $10 billion investment that happened earlier this year, a large part of which kind of took the form of Azure credits, which kind of underscores the whole infrastructure component. But we also have Google and Google Cloud. They're partnering up with Anthropic and Cohere. Amazon, AWS is partnered up with Stability AI. So, these partnerships at this scale are pretty recent development. They're very important growth catalysts for the space. And so, I mean, essentially at this point, we've done the work and we've established what are basically the foundational models for this whole space. And now we're fine-tuning them, creating specialized applications, building application layers on top of them, and just kind of creating that user experience in AI. So that's where we are. Come a long way and still kind of a long way to go.
Do you think it's kind of akin to Moore's law in the growth trajectory, or steeper?
I mean, as far as what? As far as just the computing resource that's been thrown at it? I mean, in what sense?
Well, both the computing resources as well as the sophistication of the actual models as they move forward.
Yeah, I mean, if you, I mean, the sophistication of models, it's obviously clear. You know, these models, the models from 2015 are just not comparable to the models today. You know, the 175 billion parameter models. As far as what happens on the infrastructure front, yeah, like it's just massive parallel processing. You know, I'm not sure how that conforms exactly with Moore's law, but clearly you need a lot of it to, you know, to both develop the model and to actually run it and have, you know, 100 million users using it as well. So very infrastructure intensive, very complex, very large.
So what you say is basically, you know, these large models are creating the foundation for other developments. And, you know, talking about Google, Tim, what do you think? Why is Google somehow, somehow we feel like that Google is surprised by the speed, you know, and the power that OpenAI together with Microsoft could develop? Or what do you think? Is this like tactics, or are they really kind of surprised and behind at the moment?
Well, I think the most obvious answer is that Google makes a lot of money with AdWords, and when you go into Google and you do a search using, you know, the Google search engine, they have a business model that generates an enormous amount of income for them. Moving into AI and a ChatGPT environment, they're going to have to adjust and figure out how to recapture some of those economics, because right now they don't have a way to do that. And so it's a little bit of a cannibalization story. They can't give up on the Google, you know, the age-old search engine that everybody knows and loves, and just switch over. They're gonna lose a lot of money. So it's really, it comes down to just, as usual, money.
Yeah, because, you know, also that's another topic that I wanted to ask you anyway, because in Europe everything is later. So in Europe, either it's forbidden or they just postpone the launch, and isn't it kind of an advantage when you are an American startup, because you have access to this new technology significant earlier, right? Having said this, when you compare ChatGPT and Google Bard, it's Bard is kind of very careful and very somehow like one foot on the brake and one on the gas. Or how do you perceive this tool?
I agree with you. I
compare?
completely agree with you. That's exactly how it feels.
But that's strange, because we know that they are by far the farthest and the most developed AI organization, AI power in the world. So it's somehow super strange that they do not react quicker against Microsoft or OpenAI. Do you think it's just like the story of the
down to advertising and their ability to generate, you know, income, and they'll figure. They always do. There's a lot.
But hence they're surprised, because this business model is like as old as Google is, and somehow they're not ready to cannibalize themselves, right?
Right.
So strategically, it's a disappointment for us as the shareholders of Google.
And clearly, it's the future.
Yeah. And so the more it's kind of strange that Google is not really ready to have an answer at the moment against Microsoft OpenAI.
Yeah, they clearly have not applied enough resources to that part of the problem. You know, they figured out the technology, but they they didn't focus on and this is what happens even with a company of any size. You know, a lot of startups that we have seen over the years, they come up with a really great idea, and then they come up with a product that's fantastic, but they didn't do any sales and marketing. And all of a sudden they realize that they're behind the 8 ball because, you know, they could have been generating revenue at this point if they just thought about sales and marketing. And it can't ever be an afterthought. It has to be coincident with the development of the product. But that's a whole nother.
Yeah, just to be fair, you know, so I'm a Google user. Basically, I'm using the whole stack, and you can tell that they have already, you know, started to implement these AI capabilities in all their tools. Like, for instance, when you write text, you know, the way they can correct you on the fly what you're doing, that's just great. Okay, so I think Microsoft is behind. So yeah, so basically Microsoft is far behind in terms of AI compared with Google, or am I wrong?
That's a tough one. You know, it seems like the technology is better, but the marketing has been significantly better for ChatGPT, you know, aka Microsoft. So
Yeah, I mean,
yeah, sorry,
go ahead.
Yeah, I just wanted to you know, circle back to this creating that the foundation has been created, you know, and I thought you want to say something about that for the further developments based on these foundations.
Yeah, and you know, I think the Google conversation is kind of relevant, and specifically about Google. You know, Google has been such a seminal player in AI development and generative AI. I mean, they were pretty early on the scene with kind of the DeepMind acquisition, and I think the kind of the academic paper that define, you know, transformers, which are kind of at the basis of you know, ChatGPT and these kind of the large language models. It was called "Attention is All You Need." I think that came from Google in 2015. So they've certainly been kind of an early player and a thought leader. But it goes to the kind of the layout of the space. I mean, you have the model, you can have the infrastructure, but you also need to layer some kind of a user experience on top of it, and it needs to be commercially sustainable as well. And so that kind of speaks to how this industry is now kind of defining itself, you know, the basic structure of the industry. So, you know, as you said, you know, we've got the foundational models, we've got the GPT, but we also need to build apps on top of it. And that's really the kind of the two main layers in the industry, right? The large models, they're kind of at the core. You know, they're platforms in the proper sense of the word, but you know, in really simplistic terms, there are operators and developers of models like OpenAI and its GPT, and there are users of models that are built on top of them, right? So applications, and this could be one and the same. So, you know, GPT obviously serves as the large centralized foundational model, and ChatGPT itself, which is OpenAI's own chatbot app that interacts with this model. But you know, there are others who can access GPT and models like it through APIs, and they can use it for, you know, a variety of kind of niche and specialized purposes.
And this isn't a new idea. You know, I mean, back in the 90s, I worked for Oracle, and it was the same story. You know, it was, we've got data, but data is nothing without an application and a user interface. That's what creates information. And information is what is powerful. Data is not powerful by itself. You know, you got companies like Databricks right now that are taking unstructured data and allowing applications to access it so that you can deal with and access and create value from that data in terms of information. But the same thing today, you know, with ChatGPT, it's the applications ultimately that are going to push these players to the forefront.
Absolutely.
That's
Right.
that's interesting, because you could see, at least at the public, on the public side, that all these like new generation database companies, you know, they now in a hot spot, right? Like MongoDB or
Oh, yeah.
Snowflake, or of course Databricks, but they are private still. I think, you know, these companies are in a very good position now.
Yeah,
Or
especially Databricks. I'm a fan of what they're doing.
Big,
so, do we
important
have
company.
some examples you want to talk about, just to make it more tangible, Max?
Yeah, like as far as what generative AI is kind of expected to do or can do, just the applications. I mean, clearly we've already, you know, we're building this very bustling, you know, application ecosystem on top of these models already. You know, we're also building kind of specialty models, right? We can train them on smaller specialty data sets, you know, customer specific data sets. But you know, this two-tier nature of it still kind of remains. But as far as uses, you know, there are potentially so many, and I think that's very much integral to this whole theme. You know, clearly chatbots, personal assistants, you know, stuff that might integrate directly with search. You know, I would fully expect it to integrate with search. You know, we're seeing it already. But you know, also obviously content creation and, you know, text and image and animation. You know, you can extend this to other things like industrial design and architecture and drug design. I mean, you've got coding assistants like GitHub's Copilot. I think that's based on GPT as well. You know, you've got customer service assistants, you've got, you know, e-com tools, product recommendations, you know, medical, mental health assessments. You know, it really is kind of a very, very broad set of use cases, but I think this is what separates generative AI from, you know, the prior kind of micro hype cycles that we've seen kind of in crypto and metaverse being kind of some recent examples, is that you know, the actual real world value added use cases don't really seem to require that same sort of stretch of the imagination, and they're really broad in their scope.
So it's fair to say that there is a big hype, but there is a lot of promise. So me personally, I think that AI as like this foundational technology will have more impact on society and the world than the whole internet before that. That's what I think. So definitely, you know, it created a big splash in the markets. And what do you think, what I just said, in the midterm, the impact of AI to the world, to the society, and how does that look from your end as a VC?
It's created a pretty material impact, again, you know, as I said, in public and private markets. I mean, I think it would be fair to say that AI has been a major driver of markets this year, and it's contributed a lot to the market. We're talking about public markets, you know, recovering from their winter 22 lows. You know, at this point, most all the tech majors have serious exposure to AI, you know, both from what they do in-house and also through these partnerships with startups. And so they really led the charge in the market recovery. So, you know, clearly we're talking about Microsoft and Google and NVIDIA and Meta and Amazon. And, you know, for a while there, they were basically holding up the major stock indices in the US, you know, just given the sheer weights of their market caps as part of the indices. You know, NVIDIA is kind of a standout amid all these. It's seen some pretty dramatic trading action, especially around, you know, its last quarterly release and with their upgraded to guidance. You know, I think that really underscores the importance of infrastructure in this theme. You know, this has happened for, you know, NVIDIA specifically. It has happened before. We've had a similar run up during the crypto boom. So NVIDIA just has this knack for being kind of in the right place at the right time in the hottest, kind of most hypey theme. And it just so happens that the the GPUs they produce, happen to service these themes really, really well. I mean, overall, we're kind of getting to a world where vast amounts of parallel processing is becoming important, I guess.
But
But I
hang on,
think,
real
you know,
quick.
to answer your question, Fabian, it's early innings, and there's going to be some, from an investor perspective, massive winners. To say that this could be bigger than the internet so far, I think is a fair statement. I think it certainly could be the case. And one of the challenges that has been an early one is the source information, is the data reliable? Is this actually information that's accurate? Is it based on science and facts? And it really has to be, for it to be a utility moving forward. And I think slowly that's happening. But it's just the beginning. And there are going to be some, again, massive winners, and it's our job to try to figure out who they're going to be. We're later stage investors, so we're not looking at the people who are ideas on the back of the napkin and putting together kind of their first product. We're looking at the companies who have a little bit of momentum and are a year or two away from hopefully a liquidity event. So we're a late stage VC, as they call it, not a traditional VC. But I'm looking forward to the next, call it 5+ years ahead, of seeing who rises to the top and starts accelerating, because it's going to be pretty exciting.
So, but Max, you just mentioned crypto, okay? And with crypto, there goes also the metaverse, and Zuckerberg, now his company is called Meta. If he could go back, what do you think what he would do today? Would he call his company Generative?
Gen, I guess.
Gen X.
So
Hang on.
God.
Hang on. Look, but what happens with the investments? So it's clear that AI sucked away a lot of money from metaverse, from crypto, and so on. What's going on? I know it's not on the plan that we talk about this now, but just real quick, what's going on with crypto and metaverse? Is it dead, or is it just?
Have you ever met Max's digital twin?
No.
He's a fascinating individual.
Do I have one?
And you could only meet him in the metaverse, just so you know.
Oh, you have one. Do you have one, Max?
Well, apparently I do. He's out there somewhere.
Okay.
I didn't deliberately create one. I don't have a Horizons VR account, if that's what you're getting at.
But Max, let me go back on your first slide. Can you put that up real quick? Because this Gartner life cycle curve. This curve, there's just AI on it, right? I just saw one last week, and crypto is now already going down and is now reaching like the valley. So basically, there is always on the side where it goes up for the first wave, there is the potential technology that will disrupt at least the VC money from the hyped technology like crypto. So AI took away all the money from the crypto. So crypto is kind of out of the radar, dropped down into the valley. Yeah, what do you guys think what's going to happen with crypto and metaverse?
The metaverse for now is it seems dead. I mean, clearly I can't get in the mind of Mark at Facebook, and what he would do in kind of in retrospect. But I mean, like if I really tried and thought about it, in a more expanded sense, I think I understand the premise behind the metaverse. I don't think that it really could have been executed just as a VR game that's fielded just by one player in the space. I mean, I think it is kind of decentralized by its very nature. But metaverse didn't really have a clear utility case for me. I
But
mean,
nevertheless,
I get it,
Apple
if we have,
entered the space. Apple entered the space with probably, they made probably many years ago, of course, they started building the AR glasses and the whole strategy around it. In the meanwhile, Zuckerberg renamed his company to Meta. What do you think, Tim?
Well, I'd like to turn it around on you, Fabian, because you have a really strong opinion and a significant experiential perspective on Web 3.0. So where do you think that fits in with the whole, generative AI conversation?
But I think, when I try to understand what happens in this, in the war room of Apple, I cannot imagine that. Also, I cannot imagine that this will not be a success. They will work as long as and as hard as necessary to make this a big success. A little bit like an analogy of the Apple Watch, right? I think, that AI, AR, and metaverse somehow find a way to get connected. Neither do I think that Zuckerberg is silly. I don't think so. And when I think of a person like Zuckerberg being ambitious, then the first thing he has to solve is that he can bring the best people on this planet in his company. Metaverse, AR, and also crypto will be unified with AI. And this really then has the potential that we recreate the whole world, right?
I mean, he'll probably takes. I mean, I can see some intersects between those themes. I mean, I can see a little bit of an intersect between crypto and AI. I mean, especially if we're running these very, very large these very large computing systems. I mean, you could make the case that we could run them in a decentralized way where we kind of allocate the compute resource through through some kind of a digital asset. Maybe that somehow dovetails with metaverse. I mean, but kind of going back to where we are with metaverse, just really briefly, it was a really poorly defined idea, I would say. I mean, it's not just
Yes, definitely.
Yeah, it's not just VR and AR. No one really understood what it truly was. For Facebook, it was just, I mean, the way that it manifested at Facebook was Horizons VR, which was just this really, really underdeveloped product that really just did not have any sort of market potential, in my view. And that's really as far as it got. I mean, if you kind of abstracted further with metaverse and kind of looked at it more philosophically, then yeah, you're basically trying to create a digital twin for yourself, right? That's persistent across different kind of venues online, right? And that can be accomplished through some kind of blockchain or cryptography.
Decentralized ID.
Yeah, decentralized to some extent, but that it wasn't decentralized at Facebook, right? Like all it was just kind of a VR game.
Neither is the data,
right?
Neither is the data.
Yeah, and neither is the data. So it was, I mean, they kind of defined the theme, but they didn't really define it deeply, and they didn't define the utility of it, and it was just basically a VR game at the end of the day. Whether it kind of reappears, some aspects of it probably will in some sense, right? Like we might have this persistent digital identity, with a digital wallet. Maybe, if you kind of, if you look far enough into the future, it might have kind of certain unique rights, right? If you have this, kind of persistent digital twin. But it's certainly not the way that it manifested at Facebook, and no one really truly understood what the commercial case there was beyond just being a VR game.
But
I have another
definitely these,
question.
yeah, sorry, go ahead.
I have another question just about where AI takes us. You know, you said it could change the world, Fabian. I think about places like the Philippines, for example, where there's a significant amount of people working in call centers. We probably don't need call centers anymore. If AI gets to the point where it is, you know, such a great utility that it replaces call centers, where do all those people go? What do they end up doing? Where are the jobs? You know, does the Philippines fall into a deep depression? You know, what happens? Does it affect evolution? You know, if developers aren't valuable anymore because the models can produce better software programs in a fraction of the time, what happens to developers? You know, and legitimately, how does that affect us as a species? Because developers, you know, have a very strong place because they have a lot of value right now. I don't know.
What is about the journalists? What is about the writers? What is about the storytellers?
Exactly.
You know?
Yeah. Yep.
So
What about the
what is
podcast?
about the whole agencies that create content?
Yep.
So I would change the job now.
Yeah. Yeah, that's the way you should be thinking and the way you should be telling your kids.
The social impact in our society, but also we know from the past that once a technology has been invented, it doesn't go away. Even EU will come up to ban or regulate all that technology, but they will fail.
It's going to persist. Yeah, I agree.
So, you know, in the end, I think now at the moment, when you want to do a bet, like not too risky bets, you invest into the companies that generate and own the biggest amount of data.
Which is Google, Amazon, Microsoft right now, and Apple.
And Facebook. Also Meta or Jenny. Yeah. Yeah, when we go on like this, you know, Zuckerberg will challenge you in an MMA fight, Tim.
I'm gonna pick Max.
As your champion.
Yeah, the youngest.
Yeah.
Getting less young by the day, so should be soon.
Come on.
Yeah, so yeah, talking about financial markets.
Yep.
So
I think there's an interesting phenomenon that Max mentioned earlier, you know, that a lot of these AI companies have propped up the markets over what should have been and possibly is the worst recession since the Great Depression. And there's really been no breadth whatsoever in the market, especially the NASDAQ. You've had some of these huge tech companies that have maintained massive market caps despite everything else that was going on. Yet what most people don't realize is that over 90% of the companies in that index have taken an absolute bath, right? Max, you want to talk about that a little bit?
Yeah, I mean I mean, I wouldn't say it's quite as severe as that at the moment. I mean, clearly breadth has been concentrated, you know, throughout this whole rally. It's kind of broadening out right now. That's a slightly different conversation. But for, you know, for a good part of this year, for this kind of recovery rally, you know, the rally was really concentrated to the names that had, you know, this meaningful exposure to AI, right? And kind of this theme overall, it was like when it first kind of came on the scene, it was mentioned really in the same breath as, you know, the next industrial revolution, and, you know, clearly very, very hypey language. And, you know, there are kind of just basic commercial and market realities that we have to deal with, but, you know, very, very important, you know, and sort of a paradigm shift in many people's perception. That, like, you know, just like you know, the kind of the emergence of the consumer internet, right? What that did was it kind of created this pretty distinct market run up and also an expansion in multiples, right? And these companies are just so large, and just their market caps are so they're such a large part of their overall index that it kind of brought everything up, right? And you've got so much passive investing that happens on an index level, right? So when the S&P is going up, you've got algorithmic trading, kind of passive investors, algorithmic strategies that are basically buying the index, and that kind of pulls everybody along. But for up until a few months ago, if you stripped out just the very large AI names, the market would have been slightly down for the year. So all that multiple expansion, all that kind of price performance really was in that tech major group. And for the overall index, yeah, it certainly created multiple expansion. If you stripped out those names, then we're still looking at a market that is probably anticipating something like a mild recession. So right now we're, call it at a 20, maybe just over 20 PE for the S&P. If you strip out the big the tech majors, the AI names, it would be lower than that. It would kind of be in that I don't have the most recent number, but it would be kind of that 15, 16 PE range.
What if you focus on unprofitable tech companies?
Well, this goes to again, what happened very recently. We are kind of dealing with a very, very large kind of short squeeze across the market. So it is broadening performance kind of across the board. So a lot of these names that have been beaten down, they are coming back, and they're coming back in force. And very recently, the tech majors, they are flattening out. So if you look at Microsoft and Nvidia, they had this pretty massive run up, and now they're just kind of plateauing. Whereas the most short names from the bear market, unprofitable tech stocks, they are really starting to move, and there are kind of just market dynamics that are animating that. There's a lot of short covering that's happening. So the breadth of the rally is becoming a little bit more broad-based, but that was certainly not the case for most of this year. And again, this was just driven by this theme that kind of captured everybody's imagination.
So where does this market go next? Will it blow off soon, or?
Well, it seems like it's taking a break for a lot of these names that have run up.
So break means going sideways or down?
Just range bound. Yeah.
It's more going sideways, and it's definitely more of a macro conversation. And you've got to think about what the Fed's doing and what the targets are and where we're going to be in 6 months. For the next few months, and Max, obviously you're going to chime in, but there's a lot of just sliding sideways.
Yeah, that's interesting, Max. That reminds me of some what you said once in a previous episode, namely, why should Powell go down with the rates if nothing breaks?
And that's exactly true. Yeah, if we get a massive reduction in rates, that usually is a response to something
that has broken.
And it's kind of an amorphous something at this point, right? And it could be commercial real estate falling apart. It could be just this mild recession. It could be a severe recession. From the looks of it, from the data that we've been getting, it's still kind of holding together.
Commercial real estate is holding together.
Huh?
Commercial real estate is holding together.
Not commercial real estate, but the backward-looking kind of economic data. So unemployment, GDP, that is still holding together for the most part.
Yeah, I usually drive looking in the rearview mirror. I don't look out the windshield ever.
Well, if you're the Fed, they got the whole transitory inflation idea very wrong. So I think they're very conservative in how they in how they formulate policy. So they're very reliant on hard data, and a lot of that just happens to be backward looking. I mean, clearly they're not stupid. They're aware of what's happening in commercial real estate, but it's just probably a problem that they're going to deal with when it kind of properly blows up.
That sounds like a great utility for AI.
Central banking.
Yeah.
Yeah, decentralized.
Decentral banking.
Decentral.
I would imagine a lot of economists will be out of the job
Sushi.
and unhappy.
When you say that AI has the potential to disrupt this world a way that we have never seen, so that means also, again, in you guys' words, it is a power of deflationary energy that we have never seen. Means that you have, like, simply spoken, all these companies that just have driven these values up, they're all involved in this AI area.
Well, it's the classic kind of productivity in tech being disinflationary, right? So, productivity is just one of those things that drives economic growth. And I mean, whether it's truly disinflationary in the long term depends on what it does to kind of the employment picture. I mean,
Right.
if it creates massive unemployment that really stresses the social safety net, then no, it would probably not be disinflationary. But that's a slightly different conversation. I mean, at this point, we're just looking at the tech and we're looking at its potential. We're not really truly seeing the big kind of social impact of it yet. Learning how to use it, but it kind of seems exciting. I mean, clearly, very very kind of important impact to the public markets this year. Tim, I would say the same is probably true for the private markets, if you want to kind of chime in on that, but certainly seen a lot of activity in in artificial intelligence, despite very, very kind of broad-based slowdown in the VC-backed ecosystem. Clearly the sector is on everybody's radar.
Yeah, you showed me a slide on that recently, but
Yeah.
the amount of VC funding going into AI versus other categories is extraordinary.
The mega rounds. I mean, if you compare it to to AI investments that we've been seeing kind of in 2018 and 2019, yeah, like we're pretty much kind of an order of magnitude higher as far as just pure volume of funding levels. And yeah, I mean, going back to the crypto conversation, it's also pulled a fair bit of funding from other frontier
Can you
areas.
show this slide?
Crypto being one, right? I mean, I will say though that I just want to add a little bit of nuance to the whole VC funding picture for AI. We are in a very, very severe slowdown in VC funding for the entire ecosystem, and AI is not exactly immune. So, I mean, if you look at funding levels this year versus year on year in Q1 and Q2, well, I mean, we're down in AI funding year on year in Q1, and we're basically flat year on year as of Q2. So, I mean, it's healthy. It's certainly very healthy compared to other sectors of kind of the VC-backed ecosystem. But it's, we're not exponentially higher this year than we were last year. I mean, the opposite is the case. We are still in a broadly slower environment, right?
Yeah, but if you look at the slide, Max, I think one of the important things to realize is that the VC industry, and the public markets, everything, it's basically an engine that you put in gas and it puts out power in some form. If all the gas is going into artificial intelligence, all the liquidity is going to be coming out in artificial intelligence. So, if you're going to bet on something, you should be betting on AI, is what this chart is telling me.
And this is true? You would recommend this?
Oh, I'm not here to make recommendations.
Okay. Oh, that reminds me of the compliance office, right?
Compliance, yeah.
I mean, I would say that, look, like clearly the liquidity is there. I don't think any of these companies are really close to exiting, nor would they want to or need to. For a lot of them, the actual commercial model is not fully worked out. I mean, so what's the commercial model for OpenAI, right? It's you're just paying for the chatbot and you're paying for the API. I mean, I would say that's not truly a long-term mature revenue model for OpenAI, and it's an open question whether OpenAI actually wants to go public. I mean, it's kind of a unique organization in that sense. But just on the face of it, looking at the VC funding dynamics, it's clearly there's kind of activity in the space, right? So this slide, it sort of is reflective of where the interest is in VC, and these are mega rounds, right? So everything kind of $100 million and above, and you can see that AI is taking the lion's share of that. And think the $10 billion round, the Microsoft investment in OpenAI, that's a big part of this particular chart. But we've seen a number of other rounds that have crested that $100 million mark as well.
But if you look
Hey,
at
Max.
SaaS back in 2020 and 21, versus this chart, it would be pretty dramatic.
Was SaaS in the top bar, or was it crypto? And did it look the same
Crypto and
extreme?
SaaS for sure.
And it was at the same extreme, or it was more balanced?
I don't know.
It was, I think it was more balanced. Don't have the numbers just right offhand. I mean, clearly.
So bubble.
Yeah, I mean, the prior kind of mini bubble, I would say, was probably in crypto. And we're well past that point, kind of that trough of expectations where we're kind of climb back out over time with crypto. But yeah, I mean, like when you start seeing very large mega rounds in relatively kind of commercially young companies, clearly it's just thematic interest, right? And there's very concentrated thematic interest here in AI, clearly. And you can see this reflected in valuations, right? So valuations have definitely been re-rated higher for AI as a sector overall compared to other areas, which are broadly speaking down in VC. And you can see it here for the earlier stage, but it's probably pretty illustrative for the valuation dynamics that we're seeing generally.
And this gives you some insight into what the early stage VCs are thinking, what the sequoias and the Kleiners and the benchmarks, going back to the last slide, they're thinking, this is where we're going to make money, obviously.
Well, are they not now? But they're so big. They have so much endowment money, and they have pension fund money. These names, didn't they have become followers? So or in other terms,
not to the same extent that some of the bigger late stage guys did. The early stage guys are still, for the most part, working hard. Obviously, there was an issue with FTX and that and debacle like that. But
I didn't want to bring up.
I think and I hope those are exceptions.
I mean, I would say that like yes, clearly, if you're an investor, you think that you're going to make money here. I think also just it is a tough market for VC, and VCs do have a lot of dry powder, and they do need to deploy it in ways that are defensible vis-a-vis their LPs. And a lot of companies just are not investable, right? They're going through this period of retrenchment, right, where they're kind of optimizing their operations, they're laying people off, they're kind of learning how to deal in this more challenging economic reality. And AI is very much theme driven, right? So you're departing away from that fundamentals based investing, because again, these, for the most part, these companies are not in any sense mature commercially, but they are thematically very important, and VCs like that, right? And it's a space that at this point has, a lot of early stage players, but a lot of, we've got this little herd of kind of freshly minted unicorns here as well. So yeah, and I mean, and look, and we are, again, when you are at that peak of inflated expectations, going back to the first slide, yes, I mean, you are seeing high valuations. You are seeing high valuations for companies with, with relatively kind of modest, kind of commercial footprint, right? So a lot of these companies, the multiples on them are really quite rich and extended. And yes, I mean, clearly a lot of expectation is built into that valuation. And clearly this is, in everyone's mind, a pretty important space. But, could you call it a bubble or a mini bubble? Sure. But that's just how things happen. I mean, bubbles, they serve their purpose. They attract capital to, these very kind of important key areas of development. And
I think it is a bit of
important
a
area
bubble
of development, right?
Pardon? The
I
team?
think it is a bit of a bubble. We have seen this before where something takes off really quickly and demand spikes in a way that really doesn't make sense. And I could tell you that there's a number of these names that people want desperately, and will pay up for, that have either not the value that you see on this page right here, or potentially no value. You talk about Jasper. That's not a company that I'm very familiar with, but I know other companies on this list that fall into that same category, where they were very exciting for a very short period of time, and now people have moved on and they're not coming back. You're not going to go back, are you? Unless they came up with something really fantastic, and who knows, they might. I'm not going to say that they won't, but this is a bubble. Absolutely. These
I mean, it's questionable. It's questionable. Like the example of Jasper. Jasper basically built a user interface. Okay, I'm just a user. Okay, I'm not an expert. I'm not an analyst on these companies. I'm just a user of like Jasper and ChatGPT, for instance. And as far as I have understood, Jasper just built a user interface based on an OpenAI interface. Okay,
on the GPT model, right? Not it's an application built on top of a third-party model.
And then ChatGPT, which is also an interface, came out and basically disrupted its clients, its business-to-business clients who work towards the API. I found that questionable.
Absolutely. Yep.
Yeah, I mean, it speaks to, I would say, just the nascent nature of the space, right? Where kind of the politics and the alignments aren't fully worked out yet.
It's Wild West.
And the business models aren't fully worked out yet either. But the kind of the proof is just in kind of the immediate kind of user experience, right? We saw what we can see, directly what the tech can do. Again, we're probably going to hit that peak, and we're probably going to retreat back from that peak of expectations, and we're going to learn to use it, again, in kind of commercially defensible and sustainable ways. And it's not now; it's probably ahead of us. But right now it's a mini bubble. It's pulling in a lot of capital. That capital is being deployed. We're probably going to see a lot of really cool development, and how that manifests in kind of a business sense is it kind of remains to be seen. But the capital is out there. I think it's also kind of important to know that beyond just the realized funding that these companies have gotten to this point, there's also a good bit of dry powder that's accumulating that's dedicated to this theme. Major VCs and corporate VCs specifically, they're raising very large dedicated funds to the theme. So I would expect capital deployment in the sector to stay pretty active for the foreseeable future.
And the fact, when we say bubble, it's not that it's going to implode and it's going to go away. It's just that they're not all going to be winners.
Yeah, it's normal.
Yeah, and no space has, no space is so good that everybody can be a winner, and clearly there's going to be consolidation and transformation.
Yeah.
And again, bubbles happen, they happen repeatedly. It's just the natural course of things, and you could argue that it serves its purpose, right? Of allocating resources really early to, very important areas.
Yeah.
Sometimes it happens where you allocate resources to less important areas, like, metaverse, right? But AI doesn't seem to be quite in that same category, just because it really doesn't take that stretch of imagination to see how this is going to be useful. Again, in just such a broad variety of use cases.
Max, so where does the market go from there?
Yeah, as we've been saying, right? Like we are at the peak of the hype cycle. How this blow off, what it looks like is kind of an open question. But if history is any guide, the fervent hype, you would expect to cool off. We'll go back to kind of a more sober reality, right? But with the added paradigm of AI in the mix, right? And so presumably we'll spend time to fine tune the tech and discover new applications. We're going to learn its constraints and its limitations, and just basically learn how to live with it, right? From a market perspective, as I said, you might be seeing some of that happen right now. As the markets have continued to rally, the tech majors they're taking a bit of a breather again. They're range bound. So, they obviously set the expectation bar pretty high, right? And so they would need to contend with that in the immediate future. That's going to have market consequences of its own. As far as usage, anecdotally, we might be seeing some initial cracks appear there as well. So ChatGPT kind of being the flagship app in this space, they're apparently seeing some drops in engagement. And this came from SimilarWeb. They did an analysis on ChatGPT's traffic, and their traffic numbers have been plateauing for a number of months, but they're actually down almost 10% from May to June. And so some of this is kind of the novelty wearing off, and some of this is users kind of coming to grips with its limitations, right? So I pay for, the ChatGPT 4, right? And I'm limited to whatever the 25 inputs in 3 hours. Clearly that limits my ability to kind of interact with the system. And clearly they do this for a reason, right? It's very infrastructure intensive, and they're trying to optimize that.
I have heard some other analysts talking about that this is because of the students being on vacation.
Yeah, exactly. But this user group as well, right? Like if you're actually fielding a product that is going to change the world, you need to make sure that it can service the world, and it can service it pretty much as the world wants to use it.
And we see some parallels with Facebook back then, who was also just for students, or not just, but when you can capture this amount of users in a so high density of a certain generation, and it will develop new features, of course, they will stick with it and becomes the new standard.
Yeah.
What do you think?
And again, I'm not sure it's going to be ChatGPT necessarily. I don't know if that's the final form factor that it'll take, or whether that'll just be kind of diffused into search or Bing or Google, right? But yeah, no, clearly again, it's hype cycle, right? So we got to that peak, not very, very novel. Now the novelty is wearing off. We're now kind of looking at the product for what it is and how we can use it. There are just simple realities there that are involved, right? I just read an article a couple of days ago where apparently the performance of GPT-4 versus GPT-3.5 is actually degrading in certain numerical tasks, and no one seems to know why that is, right? And so somebody speculated that they just might be throttling their infrastructure use, or kind of trying to optimize infrastructure, and it's creating some degradation of actual performance.
That turned off the app that can Google or Bingly, or how you say
so
that.
they turned off the Bing search. So it's still very much a work in progress. I would say that the other limitation is
Big
CapEx,
load.
right? I mean, these things are vastly expensive to operate and run, right? So many GPUs orchestrated across kind of vast networks. And it might be something of a bottleneck in the near term, right? You know, OpenAI, they lost over $500 million last year. I mean, I don't know how much, what that number is going to look like for this year, but I would imagine it's going to be substantial. So, you know, infrastructure might just be one of those deciding moving pieces. You know, and there are startups that are creating apps and models, and they will have kind of, then they might have real value. I would suspect that kind of the real value generated by AI might end up kind of concentrated in the players who can bear the CapEx. And so those are the tech majors and the infrastructure that they can sort of leverage. You know, beyond that, looking at kind of the longer term picture, there are going to be regulations. Clearly, everyone's interested in regulating in some sense, and there's a lot of ways in which it kind of needs regulation or invites regulation. You know, copyright and information integrity and privacy, right? And so those are important. Those are going to get worked out. You know, depending on what those regulations look like, it might you know, it might throttle growth a little bit, just because regulation tends to do that. You know, tying this back to kind of the macro conversation that we were having, yeah, you know, it's a very powerful productivity tool. As you said, it's a force multiplier for, you know, the white collar labor force. And productivity, again, very important driver for economic growth. That's presumably a good thing. Flip side of that, you know, we might see very large dislocations in the labor force. And you're kind of talking about the labor, like a very skilled, like you're talking about dislocations in a labor force that's already skilled and it's white collar, and it kind of becomes increasingly more difficult to reskill these workers that are affected by AI to, you know, up the value chain. So, you know, it kind of remains to be seen how that's going to get worked out. In March, Goldman, I think, released a note where they said that in the US and Europe, in the EU alone, there might be 300 million kind of white collar workers that are exposed to automation in some sense, or not white collar.
How 300 out of how many? Do you know that by
300 out
heart?
of whatever the labor force is. I mean, it's a very substantial part of the labor force, something like a third of it, right?
Oh,
Maybe
okay.
more, right? I don't remember the exact proportion, but you know, it's a pretty dramatic number, and that would be very disruptive. You know, whether that is politically tenable in this day and age is an open question. So perhaps, you know, we'll see that addressed in regulation in some sense, or maybe some new kind of economic paradigm will result. I mean, if you are displacing so many people and so many people with, you know, that are actually kind of skilled and that can't easily be upskilled, maybe that leads to, you know, some kind of a broader, you know, social safety net or universal basic income, which would, you know, have consequences of its own. So it's a big, interesting, complex future for AI and kind of what that means. But, you know, it is important, it is significant, and it's significant in so many ways.
If you try to eat an elephant in one bite, you'll probably choke and die. And there's a lot of things holistically right now in this environment that need to be bitten off one piece at a time. You know, whether it's AI or whether it's interest rates or whether it's inflation or whether it's, you know, the shelter index or whatever. It's going to take time, and we'll get through it. It's just we're in a period of change and digestion, and it's not going to all just go away tomorrow. You know, and where the market's going, we'll find out as these things digest.
Okay, but definitely we see something very big coming to us, to this planet, and to society all over the world.
We believe so.
Well, it might be so big that, again, you wake up 5 years from now and it's just everywhere and you don't even think about it, and you don't even call it AI. It's just it's just like you don't call, you know, Web 2.0 Web 2.0 anymore. It's just the web. Right.
It's life.
It's just
It's
life.
life. It's
Exactly.
life. Hey, so thank you very much. That's it for today. Please subscribe to our channel, write comments, and we see you next week. Bye.
Bye. Thanks, Fabian. I've been in person with Kelly Slater in Fiji.